Markets never lie. Humans do. Every boom convinces the retail trader that it's different this time. But the rhythm repeats, and the next move comes from those ruthless enough to see it first. October 10th, 2025. The market bared its teeth. Trillions vanished in hours. Weeks of euphoria turned to silence as fear spread like wildfire. Analysts called it a correction. Jesse Livermore, one of the greatest traders, would have called it what it truly was: a warning. History doesn't whisper, it hunts. And when it strikes, it leaves no room for hope. So ask yourself, was this just a correction or the beginning of something far worse? Let's find out how Jesse Livermore would view today's markets through the rules and strategies that made him a legend. After World War I, America thrived. Radios buzzed in homes. Cars rolled down every street. Airplanes dotted the skies. People believed prosperity would never end. Stocks weren't just rising, they were soaring. Margin buying became a game, and ordinary people borrowed money to chase every climbing share. Prices shot beyond reason. Newspapers screamed sure thing. Even banks couldn't resist the frenzy. Then September 1929. The market peaked, and in October, the illusion shattered. Black Thursday, Black Monday, Black Tuesday. Panic gripped the nation. Banks failed. Savings vanished. Unemployment skyrocketed to 25%. The Roaring Twenties, once full of promise and wealth, had set the stage for one of the darkest chapters in American history. The Great Depression had begun. Fast forward to the year 2000. The internet promised a new era. Startups with nothing but websites and dreams were soaring in value. The NASDAQ climbed higher and higher, reaching stratospheric heights. Then it all came crashing down. Pets.com, Webvan. Countless others vanished almost overnight, leaving nothing but empty offices and shattered ambitions. Panic swept through the markets. Tech stocks plummeted. By October 2002, the NASDAQ had lost nearly 78% of its value. Thousands of fortunes evaporated. Venture capital dried up. The lesson was clear. When speculation runs wild and fundamentals are ignored, the bubble bursts. And reality doesn't wait. In 2008, greed evolved. The world teetered on the edge of financial collapse. For years, banks had been lending recklessly, fueling a housing bubble built on subprime mortgages, loans given to borrowers who couldn't realistically pay them back. Then, it all unraveled. Lehman Brothers fell. The financial system imploded. The stock market plummeted. Trillions of dollars vanished. Millions lost their jobs, their homes, their savings. The 2008 crash wasn't just falling stocks. It was a stark lesson in risk, greed, and the fragile web of global finance. When leverage runs unchecked, even the most powerful institutions can crumble, and the world paid for its greed. 2022, a year that shook both traditional markets and the world of crypto. After years of low interest rates and easy money, inflation surged. Central banks raised rates aggressively. Stocks that had soared during the post-pandemic rally suddenly faltered, under pressure like never before. Tech giants lost trillions in value as investors fled high-risk assets. At the same time, the crypto market imploded. Bitcoin, Ethereum, countless altcoins all plummeted, wiping out billions in wealth. High-profile crypto projects and stablecoins failed, exposing the deep vulnerabilities of an unregulated digital finance world. Fear and uncertainty rippled across global markets. The era of easy gains was over. Caution and skepticism returned. 2022 was a stark reminder. Whether it's traditional stocks or crypto, markets can crash fast, and speculation carries a heavy price. Today, the same play is running again. It's 2025, and the artificial intelligence boom is sending tech stocks soaring. Speculation wears the mask of innovation. The crowd follows blindly, swept up in the frenzy. And just like every bubble before, the smart money watches quietly, waiting for FOMO to peak. Then they slip away, leaving the majority of retail traders holding the bag. The crash? It hasn't fully struck, yet. But history never lies. Bubbles rise, speculation explodes, and eventually reality catches up. 2025 is proving once again that whether it's AI stocks or crypto, markets can turn on a dime. And the lessons of the past are more relevant than ever. And that brings us to Jesse Livermore, the man who read the market like a human heart. In 1929, while the crowd chased every rising stock, Livermore waited. He calculated, and when panic struck, he profited. In 2000, during the dot-com mania, he would have seen the euphoria coming and stepped aside long before the Nasdaq imploded. In 2008, when the banks were teetering on the edge, he would have recognized the risk others refused to see. In 2022, as crypto fever gripped the world, he would have watched emotion take over and acted with precision while the crowd drowned in greed. And now, 2025. Artificial intelligence, crypto, the hype is everywhere. The patterns are repeating. Human emotion never changes, and smart money still moves in silence. You can call it manipulation. You can call it unfair. But one truth never fades. History repeats itself, and the crowd always chases loudly. Artificial intelligence may not be doomed, but in the stock market, history waits, patiently and without mercy. Because the market is never wrong, only the crowd is. As we wrap up, thank you for watching. Make sure to return back for episode 2. We'll dive into the hidden rhythm of the markets, business cycles and sector rotations. You'll learn exactly which sectors to watch in every stage of the economy, giving you the edge to maximize profits and make smarter stock choices. Don't miss it. The market rewards those who know where to look. Until next time, stay safe and may God bless you all.